The SMCI Supermicrocomputer Show continues. Since they were added to the S&P 500, and listen very closely here, since they were added to the S&P 500, the stock is down 72%. Yes, you've heard that right. Since they've been added to the index, the stock is down 72%. So for everyone that has been buying the index, well, this is what you get. You did not get all of this, all of the upside. No, you only got all of the downside. Now, of course, there is a reason for that, and the reason is actually not business related, because SMCI has been growing, the business itself. The problem here is, well, the fact that a 10K is still missing. 10K is still missing. There was a short report also that came out. Management didn't really address any of the big issues there. 10K is still missing. I mean, where is that? In my spam folder? I don't get it. And then more recently, Ernst & Young said, look, we think there is just too much going on here. We are not your auditor anymore. And so that's why you're seeing this big red candle here. So let's discuss Supermicro, because I do think it's a very interesting topic to discuss. Company that generates real revenue, that ships out real product, real hardware. But on the other side, from an investment's perspective, especially since this is a publicly traded company, you have to have a competent management that does not lie over and over again, even after it was caught a couple of years ago, and then they came back with this whole thing. So yeah, very, very interesting. Let's discuss all of that. Of course, do share your thoughts down in the comment section below. Like, subscribe, do all of that. We really appreciate it. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with some pricing metrics here. So forward PE, 9.8 times compared to a 5-year mean of 14 times. You've got EV to EBITDA, 7.1 times compared to 10 times. Price to sales, 0.7 compared to 0.8. Then you've got price to free cash flow. There's no price to free cash flow. There's no free cash flow right now because this is in the last 12 months and free cash flow has disappeared. Price earnings to growth sits at 0.18. Yes, I mean, after the big drop right now. So quite cheap. Currently, the average analyst price target still sits 126% higher than the price we're at today. I mean, look at this. Since the start of September, the average analyst price target has barely moved. Is there not one analyst that has the courage to actually say something here? So yeah, I mean, okay. 126% upside from the price we're at today, if you believe the average analyst price target, if you believe the 16 analysts covering this company. If you look at what the analysts are expecting for the coming fiscal years, so fiscal year 2025, sales growth 87% year over year, EPS growing 52.5%. Then fiscal 2026, sales growth of 17.11% and EPS growing 30.9%. Going to fiscal 2027, 14.84% sales growth year over year and close to 25% EPS growth. So again, this is definitely a company that is growing and growing quite fast. The numbers here are not that fake because, well, they are shipping those products to big companies, right? To the likes of Intel, AMD, Nvidia, etc., etc. So yeah, these things exist. So yeah, I don't understand why it is so difficult for them to actually even, let's say, yes, they were late, but it's better late than never, right? In this case, it's right now in the never camp, because where is the 10K? We don't know. Plus, they are going to report earnings Tuesday, November 5th. And even that, they had to release that note twice. Because first it said November 5th, 2025. And then they're like, oh no, correction. It's actually November 5th, 2024. So even dates can't be correct at SMCI. I mean, come on. Anyways, moving to the serious stuff. So we've seen the revenue projection. Now let's look at free cash flow. So free cash flow for fiscal 2024, I mean, you can see here, negative $2.4 billion. It's expected to be $320 million for fiscal 25, then $1.27 billion fiscal 2026, and $2.78 billion in fiscal 2027. So free cash flow, it's expected to, well, explode basically in the next couple of years. Now, will that happen? We don't know. As for the overall business, since Q1 2019, revenue has increased 311.9%. Gross profit margin is up 3.40%. Operating margin is up 182.9%. Net income is up 1,522%. And gross profit is up 325.9%. But of course, as we've been talking about this for quite a while, the problem here is that, well, margins have come down, right? It peaked here. Gross profit margin, 18.2%. Now it's at 14.1%. If you look at operating margin, that was 10.6, 10.7%. Now we're at 8.5% because of, well, competitive pressures. They say we just want to take more and more market share, and so margins get hit in the short term. Plus, they make a lot of investments. So yeah, this is what we're seeing. But then again, do we trust what they're saying? Because there is some trust issues here. Looking at where revenue is coming from. So in this case, you don't have the China risk, right? Because we see here that the majority of revenue comes from the United States. Then you've got Asia, and then you've got Europe. So here the issue of China risk, as we've seen with the likes of ASML, for example, not that big of an issue. So this is what you get. Of course, this is basically the revenue that we've seen before. So of course, it has increased quite a lot throughout the years. Now, the big issue, of course, more recently is because of this. On October 24th, Ernst & Young sent the members of the audit committee a letter of resignation as the company's registered public accounting firm. You can pause the screen and read all of that, or I can just read you this. It's basically a summary. So Supermicro disclosed on Wednesday Ernst & Young had in late July raised concerns about its governance, transparency, and internal control over financial reporting, after which the company appointed a special committee and began an investigation into the matter. The accounting firm decided to resign after receiving additional information from the review process. We are resigning due to information that has recently come to our attention, which has led us to no longer be able to rely on management's and the audit committee's representations and to be unwilling to be associated with the financial statements prepared by management. Supermicro said it disagreed with the accounting firm's decision and does not expect the resolution of any matter raised by Ernst & Young to result in the restatement of its quarterly reports for fiscal 24 or prior fiscal years. Ernst & Young did not immediately respond to a request for comment. So you see, you are in a tricky situation here, especially if you are a shareholder of this company, because on the one side, if you look at the business itself, you can see that it is growing, right? Okay, maybe you don't trust management anymore, but I don't think that the whole thing is fake, right? That every number is fake. No, because this business is real, the clients are real, and they even talk about, well, SMCI. So it's very, very interesting, to be honest. I'm not a shareholder of this company, but yeah, on the one side, they say here that it doesn't change anything from what has been said before, right, for their results. But if that's the case, then why is it so difficult to release a 10K? You're already so late. I mean, they could have done it a couple of weeks back. Even if you're a week, 2 weeks, 3 weeks late, release it. What is the issue? I think the next earnings report, especially the earnings call, is going to be so interesting to listen to because, well, I would love to hear their excuses, their explanations of what's going on inside the company right now. Because this is really literally not normal. Plus, if I can predict something, if suddenly they say, oh, the CFO is resigning, we're going to look for a new CFO, probably the stock goes down even more because that's basically them admitting that there is something going on there that's not kosher. So yeah, what started off as an incredible year for SMCI, right? At one point was up, what is it, 317% or so, is now looking quite grim. Now up only 16.34%, plus all of those issues around management, around the company, certainly not helping the cause. But on the flip side, if you want to bet, would it be such a bad bet right now? I don't know, $19.36 billion in market cap, expected to grow. Yeah, maybe if something comes out and it's true that there were some shenanigans inside the company, then that might hurt future contracts, yeah? Because other companies would not want to work with a fraudulent company. Of course, you can say this is not the first time happening at SMCI and still they get many customers. Okay, but fool me once, shame on you. Fool me twice, shame on me, right? So yeah, very interesting. Is it an interesting bet? I think so. I think so. But I'm not taking this bet as of today. So yeah, let me know what you think about Supermicrocomputer down in the comment section below. We are for sure going to cover this earnings report and call on the channel next week. So make sure you subscribe to this channel. Trying to reach 60,000 subscribers by the end of the year. So yeah, help me out a little bit, will ya? Thank you very much, and I see you all in the next one. Bye-bye.